In the FX market, taking a look at the June euro currency future, which had a new low, but not a new absolute low, a new low close. We hit the lowest weekly close this week since March 8th of 2017. That's a massive, massive move down. We're now 5 consecutive weeks lower in the euro, despite finishing up today about 28 basis points or a little bit better than 1/4%. 106.15 was the high, 0.8% higher than the previous close. On the downside, down a little bit less than 1/3% at 104.98.5. We ended up finishing the day at about 105.61.5. So positive on the day, but overall euro weakness still a theme in this particular currency. Now we have big data coming next week, which stands to maybe ease the sell-off in the euro currency. Isn't likely to turn it around, but we do have Germany's inflation reports and ZEW economic indices for the euro and for Germany. So that's a big batch of data next week, and that could potentially turn around the fortunes of the euro currency. But you're going to have to see something from Christine Lagarde. She's got a speech next week as well. And also, we had the second consecutive weeks of large gains in the yield on the U.S. Treasury curve. The 2-year fell by 2 basis points, but we had a dramatic steepening across the curve with a 5-year jump 11 basis points, a 10-year jump 23 basis points to 3.12, so over 3% now for the U.S. 10-year, and a 30-year jump to 27 basis points to 3.22. So there's a wide gap now between the German yields and the U.S. yields, and that's all strengthening the dollar, which of course is a headwind for the euro currency.